Motorola is now a double act. As of today, the company's business and consumer units are trading independently on the New York Stock Exchange. Motorola Mobility, with the red logo, will make the phones and set-top boxes. Motorola Solutions will focus on business communication products. That's the other logo. Motorola pioneered the mobile phone, creating the first handset back in 1973. Just 3 or 4 years ago, its global phone sales was second only to Nokia. Now, figures from Gartner put it down in 7th place, a disaster story on many levels. Sanjay Ajia is the CEO of Motorola Mobility now. He says a focus on smartphones and tablets will start bringing in the money again. He told me the spinning off of business and consumer units is about giving more choice to shareholders.
The sense has been that these two businesses are quite different businesses, and that we could focus, each of us, Greg Brown, on the enterprise business, which is a much slower moving business, and a much faster, fast technology pace, short cycle business, consumer business that I run, and that we could focus in each of our businesses better if we were separated. That was one thing. I certainly subscribe to that view. There's also the view that there are different shareholders for each of these businesses. There's the Motorola Solution business. There are more value and growth at reasonable price investors, where there are growth investors in the Motorola Mobility business. And we wanted to separate so that we can each focus on our businesses and offer the right option to our shareholders.
And one of them could potentially be sold off later.
I don't think that that's the anticipated outcome. I think we'll both trade as independent companies, and we will execute on our roadmap and Motorola Mobility. We participate in the smartphone marketplace that's growing at over 30% compound annual growth rate. We will participate in the tablet marketplace. We have very large international footprint. So I think we will go execute on our strategy, and we will grow and create shareholder value. I'm sure Greg Brown has similar plans.
I think just going back to 2007, cell phones accounted for something like 2/3 of the company's entire revenue. Motorola was a giant in this business, wasn't it? And if we go back to the Razr, when was that, 2004? That was the best-selling phone on the market.
2006.
OK, so that was the best-selling phone on the market, wasn't it? What went wrong for Motorola since then, and what are you going to do to turn it around?
You know, I joined the organization in 2008, and I am probably ill-placed to opine on what went wrong. I could tell you what we're doing right. We are focused on smartphones as the fastest-growing segment of the consumer electronics business, in fact, and I think you're seeing convergence with computing and mobility, creating this new opportunity in tablet. We're participating in the tablet marketplace. We're playing, in fact, a leading player in the smartphone marketplace. That is our strategy going forward.
But you're just playing catch-up, aren't you? Because Apple has done all of this already. How on earth are you going to catch up with what is now being dominated by Apple?
You know, I think smartphone is very much at the infancy. People believe that by 2014, this marketplace will be close to 900 million phones. I don't subscribe to the view that someone has come and played the game and taken the ball home with them. I think the game is just developing. There are lots of convergences occurring in this marketplace. There's a convergence with computing. Tablet marketplace is only 9 months old. If you look at the media convergence, more and more people are watching media on their smartphone. There is a dramatic shift happening in the smartphone marketplace, and I think we're extremely well positioned to capitalize and win in this market.
When everyone's piling into that market, which bit of the smartphone is where the money is?
It depends on which part of the world you're in. In the United States, vast majority of operating profits still in the high tier, what we call performance tier of the marketplace. In China and Latin America, it's middle tier of the market. In Europe, it's middle to high tier of the marketplace. You will see us introduce a fairly comprehensive product roadmap in 2011, as we did, in fact, in 2010. We're already a significant player in the United States. We're coming to Europe and China and Latin America. Our brand name is quite strong. And leveraging our brand name, I think you will see us deliver operating profitability.